Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of large drops in commodity prices, especially for gold and oil. First, however, the expected rebound in economic activity was recorded in the American GDP data for the third quarter of 2020 from the June quarter, but that still leaves their economy operating 2.9% lower than the third quarter of 2019. In current dollar terms, that's 1.8% lower, so by any measure, it has yet to recoup all its pandemic losses. New claims for American unemployment benefits last week came in at 732,000, which was just under the expected level. The number of people on these benefits is now just under 7.8 million and down 700,000 from the prior week. Some of those will have found work, of course, but most will have come to the end of their support, building on the social stresses they face. In better news, Toyota says global production grew almost 12% in September from a year earlier to 842,000 cars in the month, marking the first year-on-year increase in 9 months and indicating recovery from its pandemic sales slump. Their sales in China jumped almost 50%. Volkswagen is also reporting a similar increase in China. In Frankfurt, the ECB has signalled that it will act in December to support a fast-sagging EU economy that is struggling with a renewed pandemic wave. Theirs is a downbeat assessment, and a growing section of their economies are getting desperate. And that is reflected in the EU sentiment surveys that show improvement in these consumer and business measures has halted in October. US Treasury 10-year yield is up 8 basis points today at 0.84%. And the price of gold is down again, down another $12 to $1,868 an ounce. And oil prices have also fallen sharply today, down another $1 to just under $36 a barrel in the US, while the international price is down a bit more to $37.50 a barrel. And the Kiwi dollar is softer by another half cent at 66.1 US cents as the greenback rises on serious risk aversion in commodity markets. Against the Australian dollar remained firm, however, at 94.2 Australian cents, and against the euro we're holding at 56.7 euro cents. The anti-commodity currency mood is also reflected in a rising yen, and that means our trade-weighted index is down to 69.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.